Hello, friends. We'll be discussing the concept of bank reconciliation statement with you. Now, when we come to the concept of bank reconciliation statement, let us discuss a situation here. Basically, we are trying to tell you that how this bank reconciliation statement came into the picture in the first place. Now, imagine you are in a specific situation, rather, you are handling your own business, all right? And if you have to say you have a manager or an assistant, rather, your personal assistant, and you ask him to withdraw certain amount from your account and get it for you. That means you gave him a check, signed one, a bearer one, you asked him to go ahead, make the transaction, and get the amount back to you. That amount was somewhere around 2 lakh rupees is what you had to withdraw. Now that is the situation. Your manager goes to the bank and figures out that the balance in your bank account is less as compared to the amount that is supposed to be withdrawn. So let's take for an example, the amount that you had to withdraw was 2 lakh rupees. Now you have a balance of 1 lakh 50,000 into your account. The manager comes back to you and says that there is not much fund in your account, and due to which the transaction isn't getting fulfilled, or rather the transaction is not possible. That's the simple explanation that he gives as explanation provided to him by the bank officials. Now you have a situation where you understand that the reason you gave this check of 2 lakh is the reason because you knew that there is a balance of 4 lakh 50,000 above. That's the last thing that you updated or you were updated about. You have a balance of 4 lakh 50,000 plus and above, and that's the reason you wanted certain urgent cash and you withdrew, or rather you wanted to withdraw 2 lakh out of it. Now, with this understanding, you know that your cash book is showing, or rather, the record that you have is showing a balance of 4 lakh 50,000. However, the record that bank has shows a balance of 1 lakh 50,000 itself. That means there is a difference between both these balances. Now, to counter this, the accountant, this person like you, if you are the owner of the person, or if you're owner of this illustration, or rather if you're owner of this organization, you go to your accountant and you ask him, how is it possible that I know my balance is showing 4 lakh 50,000? The bank shows us 1 lakh 50,000. Where is the money gone? Where has it disappeared? Now, your accountant, being smart enough, he says, we need to get a bank reconciliation statement presented, or rather created. Now, this is where the bank reconciliation statement comes into the picture. The word reconciliation means to rectify, or rather to recheck. That's the exact meaning of the word reconciliation. Now, when we have such regular cash transactions, credit transactions, it might happen that due to this specific transactions, or rather because of all these transactions, you may or may not figure out where the exact transactions are, or what is the status of every transaction, or whether every transaction has been successful or not. Because you are running a business and there are going to be a numerous kind of transactions happening day in, day out. Based on this, you understand that there is no such transaction that may or may not get skipped. Yes, there is a possibility it may get skipped, but there is a possibility that it may not get skipped as well. But right now, when we are in this situation, we understand that there are certain transactions that are getting skipped, and that's the reason your balance is showing 4 lakh 50,000. My bank account balance is showing 1 lakh 50,000. There is a difference of somewhere around 3 lakh, and we need to figure out where is this difference. So the accountant calls in for the bank reconciliation statements and then starts tallying all the entries made in the cash book and the entries that should reflect in the bank statement, or rather we can say the record that we have, we, that is one, the owner of the business, the record that we have and the record that bank has, they start tallying with this kind of transaction statement. Now, when it figures out, or rather when it knows that due to these many reasons or xxx reasons, we figured out that these are the transactions that are not reflecting there, or rather it is not reflecting here. That's the reason you figure out there is a possibility that this transaction has been missed out, this transaction has been already done, you haven't kept a record of it, or any other entry that is supposed to be done. Because of this, you figure out that there are certain errors that has happened, and then you realize, oh yes, this is how the bank is showing a balance of 1,50,000, and you need to make changes. Or if you figure out that there is certain changes that the bank hasn't done and the bank hasn't updated, so the bank has to done or rather make those changes and get it rectified. This is when the bank reconciliation statement comes into picture. So we might have some regular cash transactions or credit transactions happening day in, day out. If you're running a business, we understand there is a lot of working capital requirement that happens. Transactions flow in, transactions flow out, etc. Everything that happens. Now, humanly, it is impossible to record all those transactions because you need to be there 24/7. Hence, we do it on electronic devices these days, because these days we call in for like net banking, digitalization, etc. So we keep a record of all these transactions digitally, and we keep a record with us. Still, we have certain errors, and that's the reason this statement helps you to reconcile everything. To basically reconcile is to gather everything at one place, figure out whether it has been done in an appropriate manner or appropriate way, and it is done as per the same standards. So basically, reconciling is proofreading of everything, proofreading of accounts. Now, the records that we have to keep further is of two books. The record that I, as a owner, keep with me is known as cash book. The record that you, as a bank entity, keep with you is known as passbook. So, the question will revolve completely around these two books itself, cash book and passbook. No other book into the picture, no other book into the question will be ever asked for you. Now, whatever revolves will revolve around these two books itself. So the one that you keep with you, that means the bank. If you are the bank, I am the owner. Whatever I keep with me is known as cash book. Whatever you keep with you is known as bank book. And we are basically dealing with only the bank column of the cash book. If you remember, cash book has three types of specialities. First is the cash column, second is the cash column and bank column. Third is, or rather, the third variety includes three columns together, that is cash, bank, and discount. Here, we are dealing with only bank column of the cash book. So that means whatever record I keep with me, that will be only related to the bank column of the cash book and nothing else. So this is one pointer to remember. Now, when we are dealing with this, these two books will be picture of your screen. Now, when it comes to reconciling, that means reconciling is the reason to figure out what is the difference between the timings and what are the reasons or what are the ways to eliminate it. So, when we reconcile things, the reason we reconcile is to figure out first the difference. Where is the difference? Why is the difference? This is the reason why we reconcile. The second reason why we do is so that we can eliminate those reasons or we can eliminate those differences. So, whatever differences we have, we go ahead, we eliminate that, and that is when everything comes back on track. That's the reason reconciliation is necessary. Now, the basic kind of transactions that you'll be dealing with are first deposits, and the seconds are withdrawals. Deposits that are done into your bank account, withdrawals that are taken out from your bank account. Now, deposit is not just related to the cash deposit or check deposit, neither withdrawal is just related to the check withdrawal or cash withdrawal. Deposits will also include third party deposits by some other person into your bank, interest being credited into your bank, dividends being credited into your bank. So, something that you have not done, but you've invested somewhere else, and that amount or additional benefit of that amount is getting credited or deposited into your account without your knowledge, basically, without you being informed about it. And that's the reason it is known as third party credit. So, that is one. Similarly, like third party, there will be like third party withdrawals also. They may be like bank charges. That means whatever services bank is providing, annual charge of that will be levied on your account. ATM charges that you use, the checkbook charges that you use, or any other banking statement request that you have placed, any other banking request like demand draft, etc. Everything will be charged on your bank account, and you won't be aware about it unless and until you go ahead and update your passbook, or rather the bank book that you have with you. That means I, as a owner, will have the bank book as well. That means a passbook, the actual passbook or the actual bank book is with the bank itself, but a replica copy of that is given to me known as a passbook. So that is something that I need to be updated with, or rather I have to get it updated to understand whether my cash book and this passbook are on the same track or not. If it is not, then I have to figure out where is the difference, and only then I'll be able to understand what needs to be done to get both of them on the same page. That's when you'll be able to figure out that the bank reconciliation statement is actually doing better as compared to any other statement. Hence, if you reconcile, or rather if you keep checking your cash book and passbook are on the same page or not, I bet you don't have to worry about getting a bank reconciliation statement in the first place. Now, the parties to this detail will be customers and bankers. So basically, customers are known as, oh, supposingly, if I am the owner, I will be the customer. If you are the banker, you will be the banker. Or rather, if you are holding the passbook, that means the bank book, you will be the banker. If I am the person who's holding the details of all the transactions that I am doing, that means I am the customer here. The parties to this specific details will be customers and bankers, as we have discussed. Let's go on to the last pointer of this. Now, this specific statement will help you to detect the errors, the frauds, and the irregularities. That means if your passbook, it is not necessary that your passbook and cash book should and always match. It is necessary that it should, but it is not necessary that it will always match. You have to get it done in that way. Hence, this statement will help you to figure out if there are any errors that you have made, or if the bank has made. If there is any fraud that is happening, that means any withdrawal that is done from your account, or any direct debit that has been charged on your account without your notice or without your acceptance, without your authority to it, or any kind of irregularities. That means there is some records that you have done and that is not updated into your bank account. So anything like that. Best example is the ATM withdrawal. So basically, if you try checking, just take one this example of yours. See in a month how many ATM withdrawals you are doing, and keep a record of every withdrawal that you do. So basically, whenever you do a withdrawal, just tally mark that thing that this day this withdrawal has been done. Now, similarly, go ahead and check that withdrawal in your bank passbook or bank statement. It should match. However, if you are dealing with different kind of withdrawals every day, you need to keep a record of all that thing. Unless and until that is done, so supposingly, if you have missed out on one record, and if that is reflecting there, that means there is something that will be shown on the higher side in your bank passbook, but on the lower side on your hand, because you have missed out on some details. So when it comes to bank reconciliation statement, you need to put a lot of pressure on these things, or rather, you need to be a complete regular about all these things. Hence, to avoid any kind of irregularities, any kind of frauds, any kind of errors which may or may not happen, we require this bank reconciliation statement. So all these details are really important when we have to understand the concept of bank reconciliation statement. That's the reason when it comes to different reasons of such videos, or rather we can talk about such things when it comes to bank reconciliation statement, there will be a lot of different reasons why a bank reconciliation statement doesn't work. So we'll get to it when we understand the video about causes of bank reconciliation statement, or causes of differences in a bank reconciliation statement. So this is all what we had when we had to discuss about the concept of bank reconciliation statement. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.